Welcome to Keys for Home, where you don't know what you have until it's gone.
Well,
We've got a
we're
special
recorded
guest
live now,
today,
so I've
Jim
got a lot of
Pratt.
fun stuff to bring to us.
Yes. We have Jim Pratt with us today. We're from Shelter Insurance. We've been teasing you guys for weeks that we want to talk about life insurance and how important it is. Today's the day.
So that was that. We should be back to live. I
Yep.
pulled up a few other videos. Introduce our guest, as Jennifer said, Jim Pratt with Shelter Life Insurance. Jim works out of the Dixon, Tennessee office. Jim, tell us a little bit about yourself. What are you?
Yeah, I've
What
been
type
with
of camera are you using that's got that low profile?
I have to go with my phone today. My laptop would not allow the camera to work, so we're working with an iPhone camera today.
All right.
But I figured a lower view is better. So yeah, it works great. Um,
Yeah, I'll try that.
yeah, you're coming from up top with the aerial view. So
Yep.
yeah.
Just
So
I
like
pulled
my
I pulled up a
grandmother.
bunch of funny memes today,
Yeah.
uh, and this is humor. Uh, they're memes, and I mean we can edit it out if we need to, Jennifer. There's no swearing or anything like that, but I pulled up some funny memes about life insurance, and I thought they'd be a good segue if you guys are okay with
Yeah.
watching one of them
Well, first
or
tell
two
us
of
what
them.
we did because we weren't here last week because we took off for the holiday. So when you're
Yep.
talking about up the nose angles, I was in DC with a bunch of my family. My kids got the phone and was running around and taking pictures from her little height and literally like up nose pictures and insanity. And it
There's
was so hot. It was great. We saw so much in DC, but it was so hot.
there's actually an ad campaign that ran a couple of years ago about a child at a wedding. They gave a child a wedding and they just ran around with the phone on. It was like a totally different aspect of watching the wedding. And they
Fun.
just let the kids record with like GoPros all day, all for the whole everything. And then they clipped it all together. It was quite interesting what the kids, from under tables to
Oh,
behind
yeah.
the back of things to it was pretty well done. So
I mean, I
so
love the
Jennifer,
GoPro
you
dogs.
say it again.
I love the GoPro dogs. So yeah,
Yep. Jennifer, you were in the White House last week, right?
I was. I was in the White House and did the tour. Had to get everybody's star IDs, and that worked out okay. And then we also went to the DAR building, and we saw the Ohio room, the Missouri room, and the Tennessee rooms. And then went up in the Washington Monument, did a quick run through the Smithsonian Natural History and Smithsonian History of America. That was so funny. In History of the America, you want to feel old, like you put on that song at the beginning where like, does everybody know this? They had Edith and Archie Bunker's chairs.
Yeah.
They had the
oh,
signposts from MASH. They had Sesame Street, Muhammad Ali's, some of his things. It was, and they had some of the newer things, like more current, but like I don't think they put things in until it's been a certain amount. So it was a great trip. We definitely need more. Oh, I saw the Hall of Jewels. Amazing. Amazing what can come out of what looks like nothing in a rock to become just gorgeous. But we definitely need to take another run up through the area. We saw the Lincoln, saw the Jefferson. The Jefferson is at the corner of Ohio and Buckeye Streets.
So I'm curious, did you put that all together yourself, or did you have a tour arranged or an
No, I
itinerary, or how
No,
you
and
just
in
did it?
fact, we were really loose with our itinerary. I had been asking my kids for probably 3 months, like, what do you want to see? Tell me what you want to see inside the Natural History Museum. What do you want to see? Because they're all so big. And of course, no one did. So the only thing we had hard scheduled time was the White House tour. And everything else, we just kind of went ad hoc. We did not. Smithsonian Air and Space Museum. It's free. These are free, but it's so busy that you have to have a ticketed time.
Oh my gosh. Yes,
So
in the Air and Space Museum, there's actually the Dulles. There's actually a second area now that's at Dulles Airport, which
yes,
is there's so much stuff. I haven't
yeah.
been there in 20 years, but I'm an aircraft weirdo, so I know that stuff.
Yeah.
Um,
Well, when the kids were like, we see this all the time, so we don't care. So I'm like, all right, whatever. So
right.
what'd you guys do for the 4th of July week and all?
Oh man, that's so long ago. Go ahead, Jim.
Well, I just got back from Pensacola. So the last 4 years or so, my wife and I go down there and watch the Blue Angels,
Mm,
which is absolutely fantastic.
yeah.
So this year we took the kids, and they enjoyed it tremendously. We've already started. I think she has already booked a condo for next year, so we're going to kind of make that a thing. But so we were on the beach, lots of sand. Still got sand in the car right now. Got to get out. But the Blue Angels are phenomenal if you've never seen them.
I I'm going to go there in a couple of weeks, and one of the
Mhm.
cool things about staying in Pensacola is you get an air show almost every day of some sort. But you
Hmm.
Yes,
got
that's true.
the Mac Daddy of it. So
Yeah,
um,
we did. I mean, it starts on Wednesday morning with Breakfast with the Blues. So we got down on Tuesday. Wednesday morning, we got to watch them. And then, of course, Thursday, Friday, they run at 2 o'clock in practice for about 45 minutes. And then on Saturdays, the bigger show. So yes, it's kind of like going to the beach, hanging out, and just getting entertained by the Blues every day.
yeah,
Nice. Have you been to
we,
the the air museum that's down there?
We haven't. I actually saw somebody post something about that. And
Super cool.
yeah, that's something we need to put on an itinerary next year to go do.
It was free when we went, and I say that because it would have been in '09 perhaps, and we were camping at the beach. And it was hot in
we've
July.
we've been there
It
every
was
year for since.
raining. And so we went there as something to do with all the little children, my mom and me and my 4 kids and my nephew. And we went there to see that was inexpensive with that many, and they loved it. Even I was like, "This is super cool."
Yeah,
We
and
went.
it's like as you mentioned, it's super hot. You think you know how hot it is, but when you're at the beach, you can get in the ocean or the bayside. You can get in there whenever you want, kind of cool off. But when the Blues go, they get you out of the water, so you cannot be in the water for however long they're
Mm,
flying. So you
mm,
think it's hot, so you can't get in the water, and then you realize it's really hot out here.
yeah,
Yeah.
So
crazy.
we had. You were asking what we did. We had a new baby arrive over the weekend. So I'm going to share that with you. That's my daughter and her new
Super
baby.
excited.
That's Noah, and that's Nick, of course, is in our group, BNI.
Which one of the
So
things we're going to talk about is the junior life policy.
absolutely.
Yes.
So before we
Yes.
get to that, I would like to, if I can remember how to not share anymore, stop screen. I was show two funny videos I came across. If you guys are okay with it, and then
Yep.
we'll set Jim loose and telling us and entertaining us, and we'll hit him with those hard pressing questions we've waited weeks to ask him.
I love questions.
He's like, "Wait, what? No, wait, okay, hang tight." All right, share screen, and can you see it?
Mm-hmm.
All right, here we go.
Hi, hon. Hi, honey. Okay. Oh, hey, Snowball. Nerd alert.
Hello, Father.
Socrates said. Anyways, we'll talk later. I didn't do it. Ladder. Life insurance so good, they're gonna want you dead. I love you too, guys. But seriously, intentionally killing a policyholder will void all life insurance benefits.
That's funny.
So yeah, that's a. You ever seen that one before? I hadn't.
I have never seen that, but that reminds me, I need to look up some of those types of things and sprinkle that into my next presentation because that's fantastic.
We'll do one other one. This is a meme. Totally disclaimer, everyone. This is off of YouTube. This is not representative of Shelter Insurance, Benchmark Realty, or Fairway Mortgage. So Let's watch this one real quick.
Or not.
No, it just takes a second for me to get it pulled up.
I'm teasing you.
Yep.
It's my-
Hang on a second. And I gotta go over and big screen it. You should be
Yep.
able to see it, correct?
Mhm.
Yep.
All right. Here we go.
Are you just going to stare at her? It was weird. Good weird. She tasted like...
Oh my Lord.
Sorry.
That was
Hey, it's it's
that was some
YouTube
Southern
entertainment.
Sam action right there.
I'm sorry, but I think I came across that. It's on YouTube. They would have taken it down 15 years ago when that was put up if it was a problem. So again,
Yeah.
that's a meme not representative of Shelter Insurance, Fairway Mortgage, or Benchmark Corporation.
No,
So thanks.
clearly
All
that was
right.
State Farm, so it's fine.
But in all seriousness, you never know when you're going to need life insurance.
You don't, Jim. Do
Us
you,
today, and
Jim? When you started with our chapter and you and I had our first 1-to-1, I told you about a guy that my very first BNI chapter. His name is Jeremy.
Mhm.
And he is with the competitor. He's way up in the. It's been 20 years. He after we had our BNI chapter long enough, and that was 10 years in that chapter. At first he was just a young man getting started, and then a couple of years into it, he would start to come and tell us some of the stories and some of the things that happened. Do you have any of those stories that you could
hey, hold on a
share?
minute. Am I lagging or are you guys lagging?
You keep kind of cutting out. I think it's on your end,
Yeah.
Jennifer.
All right, I'm going to switch to my phone instead of to the other internet I'm on. So maybe
It's okay.
if I pop out, I'll pop back in. Okay. There it is.
You're locked up now. You're definitely locked up now. You're immobile.
I'm back.
Now you're back.
Okay,
There you
good.
go.
All right.
Move
So
around real fast and do something.
so tell us some of the. Just to start with the children, Lance, you said that you were going to get your kids life policies because sometimes things happen when they're, between birth and 18 that prohibit them from getting life insurance policies in the future. And this is a policy that can roll up. And I know a lot of people are like, oh, it's this and so life insurance. You're just wanting the kids and you're never going to need it because thankfully we are not in a place in our civilization where we bury our children very much anymore. But it's not really about burying our children. It's about protecting our children for future life insurance needs.
Yeah, absolutely. So, Lance, you asked me a little earlier a little bit of my background. So this kind of goes back to that. I've been with Shelter for about 12 and a half years or so, and I've had multiple roles with Shelter. One of the roles I've had an opportunity to do was be a sales leader. So I was in Kentucky, and as a sales leader, had an agent there, and it just so happened to be in his office one day when a older gentleman had come in, and he said that the agent before him had sold him our junior special policy on his grandson. And I guess this is about, I don't know, probably 8 or 10 years had passed since they had sold that policy. But he was specifically coming in to say thank you to that agent and or to Shelter in general, because when he sold that policy to the grandson or on the grandson, he was perfectly healthy, no issues. Since that time, he had gotten and developed diabetes over that period of time, which doesn't mean he's not insurable, but it also means he could be insurable, or more than likely it's going to be rated up on his life insurance. But because he had gotten that junior special policy for him, he was about to be able to turn 26 pretty soon, and he was going to be able to convert that to a permanent policy and guaranteed insurability with no issues whatsoever. So when it comes to, I'm very passionate when it comes to young people and or kids and talking about life insurance. Um, it's not about, their death, which is a big objection that
Right.
we hear all the time.
Right.
It's more about, try to paint a picture of the future. I actually had a conversation with a lady yesterday who had her 7-year-old daughter was here, and I had a junior special brochure sitting on my desk, and she just happened to pick it up and look at it while we were quoting her other business. So we talked about it a little bit, and as I explained to her, this isn't again about the death. It's more about your daughter's going to grow up, and she's going to go to college. She's going to get a good job. She's going to get married. She's going to have kids. The family's going to buy a house. At some point, she's going to get a promotion, and from that promotion, they're going to buy a second house, and so forth and so on. So it's about setting an example. Number one, it's about guaranteed their insurability to make sure that if something happens in the future, they have something, and something's
Mhm.
always better than nothing.
Well, and diabetes is a very common uprating that children get. But in today's society, another one is anxiety and depression.
Very much so.
I don't know under 30 what percent have been diagnosed with anxiety and depression, let alone those who have it. It's got to be approaching 50%, I would think. And
Yes.
again, it's not where you can't get insured, but you're uprated.
Yes, you're definitely rated up most of the time for something like that. And unfortunately, that's probably one of the most common things I run across. And for those in their mid 20s, that we will, as you mentioned, rate up and or deny. To be quite
Yeah.
honest, depending on the the prescriptions, the meds that are involved with that.
Mhm. Yeah. Well,
So with
and
the junior special, are they going to be rated up, or do they have a special asterisk for the life of the?
So there is no rate up on a junior special. It's what we call a
yeah.
composite, a composite rating. And of course, being as young as they are when we usually try to get the children in the junior special, later on, if something were to happen, as the ones we were just talking about, there's not going to be any rate up when it comes to converting that policy over. And I'll explain it a little bit more in depthly here in a little bit. But when we convert that policy over at age 26, it's just going to be rated on their age and whatever policy they choose to put that in.
Yeah. And that's the thing, like diabetes, childhood diabetes, which is type 1, I believe, and anxiety and depression, those can be genetic and familial running in families. And so if you have a child who has one of those situations and then you have a grandchild, I would say it's even more important to get that grandchild a junior special policy that can convert.
So yeah, so another extremely important. So another quick example was that didn't turn out so great necessarily would be I have it insured currently. It's just 3 boys. All were healthy. No life insurance on them, unfortunately, at the time. And one has jumped on a trampoline, and then he went into convulsions.
Yeah.
And at that point, obviously he's fine now. He has seizures and things like that, but he's going to have trouble to be able to get
Yep.
life insurance in the future. Um, so that's an example of those conversations that maybe we've had previously that we just kind of put off and lag behind, and then something happens, and we kind of wish that we would have gone back and maybe could have done something more, could have had more of a conversation. But that's why I always ask everybody about life insurance, because
Yeah.
I know then I can lay my head down at night. At least I know I've asked that question and followed up on that question. And, I follow up a lot. And sometimes I feel like I'm bothering someone, but when the time comes for them to need it, they're going to be glad that I did be consistent with that follow up on them.
Well, and we're talking a lot about the junior specials because Shelter has such a great policy for that. Which, by the way, if somebody needs to reach out to you, go ahead and pop your phone number. What's your phone number
Can
that
you
you want
pop?
them to call you? Yeah,
Yeah,
yours.
so my office number is 615-797-3986. And just a real
Okay.
quick rundown on the junior special, if you don't mind. So the junior special is one of those policies that, we have different face amounts, but we'll just go with the $20,000, which is our highest face amount on that. The way that works is you pay that regardless of how old the child is, from 0 to 17. You're going to pay that for the first initial 12 months. It's a $700 policy. After you pay that for the first initial 12 months, you don't touch that again. You don't pay it again. And you still have that $20,000 term policy until they turn 26. Once they
Hmm.
turn 26, they'll be able to convert that over to a permanent policy of their choice, whole life, 20 pay, universal life, etc. And whatever they convert that over to, they can take that 20,000 and they can convert it to a $100,000 policy. And they'll be rated on that $100,000 policy of their age 26 and whatever policy they get on that face amount. And then that's what their rate will lock into. But there are conversion opportunities.
Hold on one second before you do that, because someone's going to want to call you again. I want to put it up on the screen.
I'm putting
615,
it
what
up.
was it? Oh,
61, yeah, 615-797-3986.
okay.
You got it, Jennifer.
Yep, I got it.
So ultimately, that policy will be able to turn into a $20,000 policy if they convert it and or take advantage of those opportunities later on at those different ages. They can turn that into a $600,000 policy down the line. If they want to keep it at a $100,000 policy or whatever that number they decide they want to convert it to, then that's perfectly fine. But you can max out at a $600,000 policy at some point.
Okay. So there's a couple things I want to talk to you about life insurance relating to your real estate. But before we do that, the other person I want to talk to is not just kids and insuring your children against what medical events may happen between when they're born and 26, when something might happen and they're getting on their own, but also the person who says to you, I don't need life insurance, I have it through work.
Okay.
Because I know of situations where somebody was working, they had life insurance, they had sufficient life insurance, the company was bought out, they got let go. But in between when they were hired and got that policy and the company was bought out, they developed high blood pressure, high cholesterol. They had had a cancer incident that they had survived, different things that are, again, sometimes completely disqualifying events, but also sometimes just very much uprating so that the pricing is almost disqualifying. So I
That's a good way to
always
put it.
tell people to have some kind of a policy outside of work, preferably one that can increase if need be. So do you want to talk to that aspect of life insurance before we say, like, what do you need for mortgage protection?
Sure. So that's the number one objection any insurance agent that sells life insurance is going to get on a regular basis is, hey, I have it through work. And that's fantastic. If you have life insurance through work, whether it's free or at a minimal cost, you absolutely should take advantage of all the life insurance you can get through work. A couple of issues with that is number one, most life insurance through work is only going to be about 1 to 1.5 times whatever maybe your annual salary is. That's just not going to simply not going to be enough. It's not going to be enough to cover your mortgage. It's not going to be enough to cover any loans or debt that you potentially have as well on top of the mortgage. It's just simply not enough. So you need to supplement that with something that you own as far as life insurance is concerned. Because of the overwhelming majority of the life insurance you have at work, you can't take that with you if you lose that job, leave that job, or whatever that may be. I had an older gentleman back when I was first becoming an agent that needed life insurance, and he had worked for a company for many, many, many years and had life insurance for like $7 a month for I think like I don't know $15,000 or $20,000 worth of life insurance at the time, and he was not able to take that with him when he retired. And that same $7 life insurance a month, by the time he retired, it ended up costing him, I think, around $55 or $60 a month.
Yeah.
So,
Exactly.
which, on a retirement budget, that just, he did it. He still has it. I know this gentleman, and I know that he's glad that he still has it, but that strained his budget early on after retirement.
What is the current recommended amount? Two different questions. One for the main income, even if two people are working outside of the home, one is usually more like it's very rare that you have very similar income. So, like the main old fashioned term breadwinner, how much do they need? And then I also want to talk to you about like if there is a homemaker, a stay at home mom or dad.
Okay. So that's a difficult question to answer,
Mhm.
because it all depends on, it's kind of the, you both have seen it. I've showed it many times, the LIFE. What are the loans that you have? What's the income that you have annually? What's the
Mhm.
funeral expense going to look like? What's an education for your kids, and or something that maybe you want to give to church, and donate back? So there's a lot
So
of
let's
factors.
say that they have 15,000 in debt because that's kind of a normal-ish number, I think. Um, and then they have a mortgage of maybe 400,000. They've got two kids that they want to help pay through college, and they make like 90,000. Like maybe
Well,
750 to a million.
yeah, I'd say that would be plenty. I would think, depending on the mortgage. So let's say you have a $400,000 mortgage. Maybe you have a couple of cars that you owe 50,000 on. Now we're looking at
Mhm.
450. Funeral expense it can be as simple as, hey, let's just do 15,000, and or it could be a situation. Sometimes I have a conversation with people. Do you have family that lives out of town? Because that might be a situation where we want to fly them in. We want to put them in a hotel room. We don't want your family, to be staying at home with you during while they're preparing for the funeral and during the grieving process. Because as we all know, even if we don't want to, if we're trying to grieve our loved ones and we have family in town, we're going to feel like that we have to entertain them in a way, during that period of
Even if
time.
they're
That's
not wanting that, it's an right. And the other
It's
thing
just
too
an
is
obligation as human nature that we feel that we're going to
yeah,
want to entertain somebody, right? We're going to make sure
right,
they're okay. Well, we need to be grieving. So maybe that funeral expense needs to be a little bit more than 15,000 to factor in for
yeah.
certain things like that.
Or you
So
have to
now,
fly the body home, and the family here needs to go elsewhere, which is what happened with my grandmother.
yeah. So
And
the
that's
question
going
you
to
ask is, it can range from so many
sure.
different ways. That's just kind of how we get to that answer. At the end of the day, when I'm talking to someone, I never tell them what their number is. We always
Yes,
talk about, yeah, that I ask the questions and they give me the answer, and we just write it down. And then at the bottom we have a total and we circle it. And at that point, this is how much you need. Now let's talk about how much you want,
right.
depending on a budget issue, depending on a couple of other factors. But I think kind of where you may have been going with that, because we've just come off the workers, the insurance at work, from an annual income standpoint. Just from an annual income, our suggestion is 3 to 5 years of that.
Okay. All right. So then a couple other scenarios. The people who are regulars to our podcast know that I stayed home prior to my divorce predominantly because I had two sets of twins. And it didn't make financial sense for me to work outside the house, for them to be in daycare, for who's taken off sick, the tax bracket, and all of that changes. So I talked to my ex for years about writing a will and about getting life insurance on me. And the reason was I told him, I said, what are you going to do if I died in a car accident tomorrow and now you've got five kids or four kids under five or four kids under 10 or whatever it is? And it's a key holder policy, is what you call it in a business. I was trying to explain to him is I'm an integral part of your financial picture in this
Mhm.
home by staying home. We're not talking about replacing my income, which is what most people think about when they think about life insurance. I was like, no, you need to be able to pay off some debts. You need to bury me. You need to maybe take some time off to grieve. Who knows if you wanted to, whatever. Um, and you need to be able to hire a nanny to be able to take care of the children. So I said 500,000. If you use 50 to 75,000 of it, then you have 425,000 left. Put that in something that makes modest 8% gain. You're going to be able to pay a nanny maybe 30,000 at the time from the base, the 450. So now you've got, 420 that you're investing at an 8% gain of return. So you can still pay the nanny and do cost of living increases. And then as the children need to pay for college, you can take that from some of the base money. And then when they, are to the point where they're wanting to buy a house, you can, bless them with some money from that life insurance. And it wasn't until one of our friends' mothers got cancer, and the wife within 3 days had to go and spend 6 months caring for her mother, that all the guys, not that they didn't appreciate their wives and know everything, but all the guys saw the hole that was left in just his daily life of getting kids on the bus and getting kids to practice and taking off from work and all the things. And so that keeper position, it's not, life insurance is not just about replacing income. It's about protecting the life as you know it.
Yes. So I've got an office that's empty. It's right over here. If you would like to come sell life insurance for me, Jennifer, we've got a spot for you. Don't worry about that.
Do you have
Um,
part-time help?
yeah,
Do you,
exactly. So you said something that I thought was interesting, and I like how you do this on quite a few times. We've had conversations. It is key person insurance basically, like you would have
Mhm.
if you're an employee and you have a key employee. Obviously, not the stay-at-home mom or dad is an employee per se, but if something were to happen to them, how are you going to continue to run your daily life as a
Right.
mom or a dad or a parent? That is exactly what that is from a key person insurance. So
Yeah.
100% we need to have life insurance on that particular parent that is a stay-at-home parent. There's a lot of factors that you just went through. There are a lot of factors that are involved in everything a stay-at-home parent does.
Hmm.
The key there is to figure out a way to not make that conversation as difficult when
Right.
we're talking to someone, because the life insurance conversation could be as in depth as we want it to be, as we just kind of or as you just kind of eloquently put together just then, or we just kind of want to make it, keep it simple because we don't want to overwhelm
Yeah.
someone that's sitting across from us. So we want to try to do our research ahead of time after we've talked to the person about a few things. Just a conversation. We just have a regular conversation with somebody. We find out if they're married. We find out, hey, what do you do for a living? We find that out. We find out, you have kids. And just in a regular small talk conversation, we can find that out so that when we are preparing for that life insurance discussion, when they're sitting across from the desk from you, you've already kind of factored in a lot of those things for you. And if possible,
Yeah.
we always want to have the parents, the mom and the dad, the husband and wife. We always want to have them here together, and or if we're just having a conversation on a Zoom or a phone call, we want to have them together, because when we kind of put um, in conversation word for word, kind of what you said, then it kind of hits home because you see that stay-at-home parent start doing this.
Yeah.
They're wanting to fist bump you for understanding what they go through, and it just kind of emphasizes everything.
Yeah. The other thing I want to talk to you about, and I shared this with you, is my son William bought a house when he was 20.
Hmm.
His twin and a friend live with him. And I had to co-sign because he was like 2 points short of the credit score needed because he only had one trade line.
Hmm.
And so I said to him, God forbid something happens to you, William. What do you want me to do with this home, which is really yours? You're paying the bills, you're paying the mortgage, it's your home. I'm just on it until you can refi it, right? And I said, do you want this to go into my estate to be split between your sisters and Gabriel, who is his twin? And he goes, no, I think I'd really like it to go to just my twin, Gabe. I said, okay. Now, Gabe does not work at the same level as Will, like financially.
Right.
And I said, this is what I said to you before. I said, Will, you can't bless him with a curse. He's not going to
Great
be able
line.
to afford that house. So if you're going to do that, I absolutely want what you're intending to happen. So we're also going to get you, his house was 240,000. I said, we're going to take out a $250,000 life insurance policy on you, which your brother is the beneficiary of. So that if you were to pass and you were to gift him with this house, he can then take care of the house. And so we did that. And then the other two things I want to share with you, just to have people talk about this conversation. I have a mortgage on my house, and my kids love going to the lake, and my grandkids love being at the lake. My granddaughter, and I want my other grandchildren when they come and great grands to love that if the family still wants to have it. So I wanted life insurance to pay off my mortgage, plus some to put into an investment to gain interest to take care of maintenance. And what I told the children was every 3 to 5 years, do a home inspection, and any critical repair needs must be done from the funds set aside. And then, the watch issues need to be watched and or taken care of. But when we were on this family trip, I talked to all the kids and I said, what I'd really like to do is not just take out a $500,000 policy, which would take care of what I just said. I'd really like to take out a $750,000 or $1 million policy so that if it's $1 million, there's $500,000 that can be split between the four of you to one, buy out somebody who maybe doesn't want to stay vested in the lake house, or just because, I'm gonna die at some time. I'm not terribly old now that I have stupid high rates to get me insurance. So why not, like, the bump up rate is like, let's just history major math. Let's say it's $200 a year to go from 500,000 to $1 million. My kids split that. They each pay $50 for 20 years. Somebody do the math on that. Is that 1,000? And you're going to come out with 125,000. Is that right?
Yeah.
That seems like a good investment to me. And I know that I'm unique in that I don't mind discussing death, and a lot of people do.
Right.
But if you're in your 50s and you have children, even in your 40s, if they're grown children, I think that's a really good conversation to have. And it doesn't have to be the parents paying for it. It doesn't have to be a payday for them. But if they say, hey, I could see where this could come and I can pay this $50 a year, do it. I don't care.
Yeah.
We saw in the funny commercials, if one of them murks me, then they're not getting it anyway.
That's true. No, I think that's a great idea. And I think it's a great way to go about it as well. Especially if you're in a situation where you're, a little older, or maybe you have to, you've bought a second home, or your value of your home that you're buying next is much higher than the next one. So your life insurance is going to increase regardless of whether it's a rated up or not. Then yeah, I think that's a great idea. And if I
Yeah.
was your child, I would be all in for something like that.
Right? Okay, so now that brings me up with another question. I told you that my ex was not on page with wanting to get life insurance on me. And I know that my kids could go out and get a life insurance policy on me, but it's more expensive than if I get it and they're paying part of the premium. If your son or daughter gets married, can you take out a life insurance policy on their spouse, like when the children are born? When you do a junior policy, can you also at the same time, if the kids are like, hey, mom, dad, we don't have the money to do this, and you're like, I see this as a really big hole in your financial picture for your family, I would like to get the policy and at least pay some of the premiums on that. Is that something that a parent can do?
So the answer to part of that is yes. And I say the part of it is because the way you worded the first half of it probably is a no. So, but I don't know that's what you meant. So is your question ultimately, can a child pay for a parent's life insurance policy?
Yeah, or a parent pay for their child or their son or daughter-in-law's policy.
Yeah. as long as the person has an insurable interest with the other party, then they can be the payor. Yes, at least you can with shelter.
Okay.
What you can't do is be the owner of the policy. If someone
Okay.
is 18 years or older, they have to be the owner of their own policy. So
Okay.
when changes are needed to be made or things like that, the owner is going to make that change.
Well,
So,
that brings me to the next question. So when I got divorced, my ex was supposed to give me X amount of money in child support monthly. And he was supposed to keep, let's just say, $500,000 policy until the kids turned 18. So that if he passed, that child support was still being paid for. This is something the court put in there, or I don't know, the judge, the attorney, I don't know who put it in there. So he had a life insurance policy. And I briefly had my license in Tennessee. I had it, my parents had an agency longer, which is why I know a bit about insurance. But I did not know that there was a policy, which is the one we should have had, where he was not allowed to make changes to it because it was like court ordered and such. Because when the girls turned 18, he dropped it to 250 against the court
right,
order. And I
right.
didn't have money to amend it. And my concern was, well, if he passes, the boys and the girls are still needing to go to college and things like that, that he might not be required to help the girls because they're over 18, but he might want to. And he did, you know? So what is that? What is that sort of policy for people who are divorcing where it's like there was a certain name for it where, you know, the ex is insured,
Yeah, I don't
but
know
then
about a policy that's specifically
where they
like
couldn't make
that, just a
changes.
life insurance policy by itself. More than likely, what that is it's a court in the papers, in the divorce papers, or whatever it may be, are requiring or mandating that the spouse have life insurance for a certain amount of time, a certain amount of,
Yeah.
face amount, those type of things. They have to do that. Of course, if the spouse doesn't follow those, then they can go back to court and have something corrected on that. But as far as just a specific policy by itself, I don't
No,
know of
it was a
one.
regular life insurance policy. The difference was because I talked to someone who was in insurance, and they're like, they should have had a blah, blah, blah life insurance policy where he is the owner of it, but he's not allowed to make changes. Only the beneficiary can make the changes.
Okay, yeah, I'm not sure about that.
Anyway, all right. Well, that was my other question. No,
Okay.
my final is Lance and Jim. What else should people be thinking about as far as life insurance, particularly those who are homeowners?
Homeowners. So my initial thought is just life insurance in general is something's better than nothing, right? Whether you have a $25,000 policy, a $100,000 policy, or $1 million policy, something is going to be better than nothing. Um, as far as mortgage protection, if you will, when I again back when I was in Kentucky as a manager, there was an agent that I had there, and they had talked to this husband for many years about life insurance, and at least life insurance to cover the mortgage that's on the house. Well, he ended up passing away, unfortunately, and his wife was not able to stay in their home that they've had for so many years because she couldn't afford the mortgage at the time. So she ended up having to move out and move in with her daughter. So a mortgage protection plan, if you will, for a home is it's just a smart thing to do, simply put. So whatever that mortgage is, then you should get a life insurance policy. Both parties, if there is two parties, should have a life insurance policy for that mortgage to make sure it's covered. And it can
And
be
that's the
simply
same whether it's roommates, siblings, spouses, uh, and and like you said, and if you're younger, let's talk to our young first timers again. It's less expensive the younger you are, usually
yes.
because your health is better.
That is correct. And I would urge that if you're going to talk to someone, if you're younger and you're going to talk to someone about life insurance, it was another, again, all these questions are popping up issues that I went through recently, actually, is, you may be 25 years old and you're buying a home and you have maybe a 30-year mortgage on your home. So you decide to get a 30-year term to cover that. And that's great. And at some point in time, you decide, I need to keep this life insurance, maybe even after you've paid the home off, where for multiple reasons it could happen. Maybe you buy a second home, maybe you just want to keep your life insurance, whatever that may be. With shelter, at least, when that, if for a 30-year term, you have to convert that to a permanent policy within the first 24 years. And even if you
Mhm.
don't want to convert the policy to a permanent policy, because obviously that's going to, the cost is going to go up to have a whole life policy, for example. Um, if you're 25, 30 years, you're 55. You're going to still need life insurance after age 55. So you
Mhm.
need to be able to either, and you're not going to remember this as an insured most likely. So you need to have life insurance with not just a company, but an agent that you know and or feel comfortable with. Because what that agent's going to do is every 5 to 10 years, they're going to follow up with you if they're a good agent, and they're going to say, look, we need life insurance. We need to extend it out a little bit further. Do you want to convert part of this now? Maybe we extend it out a little bit further. Because what happens is if you're 25 and then you're approaching 55 and you realize that this policy is about to run out, or at least that term, the premium that's locked in is going to run out, and then it's going to become a year in renewable term, and it's going to get extremely expensive. You need to be able to go ahead and get life insurance that's going to push you out. If you could do that 10 years prior to 55, maybe you do it at 42, then the cost of that life insurance is going to be a lot less than if you wait another 10 to 12 years on that. And now you're at 42, you got 30 years, you're pushing it out to 72 if you want to get a term policy and
Yeah.
just stay with the lower premium on that.
Well,
So
and
life
that's the
insurance,
thing. Just like we were talking to Benjamin when he was on, when your insurance agent is asking you, did you get a new roof? Did you renovate anything? Have you picked up any artwork or jewelry? It's not because they're trying to upsell you and get more premium. If they are a good agent, it's to make sure you have the coverage you need. And the whole point of insurance is there is a scenario out there that if it happens to me, I can't deal with it at this time. But hopefully you reach that tipping point where, okay, now I'm more self insuring. My deductible is higher on my car or my house. I need less life insurance or whatever it is, and if you're watching this and you are thinking, gosh, I really need to. This is something I've thought about before. I want you to call Jim. Jim, I think I told you I have a friend. I don't think she'd mind me sharing this. She had closed a business. She was trying to decide what she was going to do next. She was married. She had a number of children. Her husband had a couple children from a previous relationship. And they had the life insurance policy out. In the, hey, what's going on with our future life insurance came up. And they saw his insurance from his company was like 250,000. This is about 10 years ago. And they're like, that's insufficient. We know it's insufficient. And they called their insurance agent and they're like, hey, we need to up our life insurance. We want some outside of work. Great idea, right? The first time that everybody could get together was on Tuesday. And on Saturday, he died. And she's been working 3 jobs ever since and trying to keep the house. So if you are hearing this and you've thought, gosh, I need that, then I'm not saying this to be ugly or to be fearful or anything. You're being told to like at least check. And Mark is not here with us. He was at his dad's funeral and his nephew died at the funeral. You don't know when your last day is. You need to have your things in order. We're going to have an estate planner come on as well, because when you have a house, you need a will. When you have a child, even if you don't have a house, you need a will. There are things that as an adult, you need to do. When we have the estate planner on, we're going to talk about power of attorney. If you have a child over 18 and they're in a car accident and they're admitted to the hospital and they're they're not awake or what have you, you as their parent, next of kin, do not have any ability to determine their care because they're over 18 and they won't allow it. So you
and it's
better
not
have a
about
power.
being fearful. It's not about being fearful
Yeah,
necessarily. It's about being prepared. Everything that you're
right.
stating right now is about being prepared
Right.
for whatever is life's going to bring you.
Yeah. And if you're prepared, then life isn't terrifying and frightening and it doesn't knock you off your
It
pins.
doesn't
Or if it
become
does,
tough.
it doesn't obliterate you when it does.
So I was going to pull this up. Um,
Yeah.
let's see if it'll let me show it to me. So, insurance. The primary purpose of insurance is to provide financial protection against potential losses arising from an unforeseen event. So we have property and casualty, we have life, we have key man, there's lots of different insurances. We don't have a lot of time. And Jennifer, you got all your points in. Is there any left or any bullet points
Well, I
left?
will say this, there's one unforeseen event that's not an unforeseen event. You're gonna
Death.
die.
Yeah.
You're gonna die at some point. You may not ever
Well,
be in a car accident, but you're gonna die at some point.
yeah,
So I
life insurance can be obviously a very serious conversation. One of the
Yeah.
ways that I've always found to try to kind of take that conversation and bring it down a notch is if I have someone I'm having a conversation with, and I'll ask them, I'll say, what is the death rate in your county? And
Mhm.
I'll get 50%, 80%, whatever that may be. Every once in a while, I'll get that 100%, which is the correct answer. It's 100%. We're
Yeah.
all going to pass away. That's inevitable. So it's about being prepared, about being prepared to leave a legacy. Maybe you're leaving a legacy to your family or your
Mhm.
children, or maybe you're just making sure that they can stay in the home that they've been in all their life.
Yeah.
There's multiple different factors and or why. Maybe you don't have kids, or maybe you're by yourself for whatever reason, and you want to leave and donate to your church. So maybe that's your beneficiary. So
Yeah.
just being prepared is
Mhm.
is the key, and I think you hit that pretty good there towards the end.
Lance, what about you?
well, I had some questions about what different types of insurance there are. Like what I think maybe we'll have to have you back because I'd like to know about what is term to tell to our viewers, what is term insurance? What is whole life? What is, I'm sure there's a hybrid. Um, I like Jennifer asked a lot of great questions. I want to drill down on that a little bit and understand because I don't even know. I mean, Jennifer's had personal life experiences. I'm 55. I'm that guy you were just talking about who is 55 and I got 3 years left on a 20-year term. And you know what? The insurance company that sold it to me, it's a big blue chip company. Um, gosh, I can't think of the name of it. It's one of the big
Yeah.
Steve Green is the insurance agent. He was a great agent. It was passed to someone else, but I don't talk to them all the time anymore. But they call to do the review. Hey, we're calling. And it's always like, it's not the person I bought it from, Jim. And so I'm like, I don't have time to talk to you. And after you do that, I don't know, 10 times. And now I'm that guy you just said that has 3 years left and I need to figure it out. So I'd like to talk about, we're at the 52nd minute. So yeah, let's definitely have him back for a part two, Jennifer.
Yeah.
But I'd like to, and where we go into that, where you spend at 45 minutes with some graphics and stuff, say this is a term policy. This
Yeah.
works for such. This works for this. This is a cat because there's people watching this. I think I want to
Yeah.
know.
This
Um,
policy is good for this kind of people.
yeah,
The other one, the whole life, the ones that convert the long-term care that convert into life policies if not used. So yeah, I definitely would love to have you come back on and dig into. And I don't know if Shelter has some things that we can run as videos. Then we can put those up on our YouTubes and our Facebook so that people can go back and watch them as the short. What did he say about whole life? Oh, that's this. What did he say about universal? Oh, that's this.
yeah.
Terms. What the
Oh, the
heck was it
AI
called?
would be amazing.
Yeah.
I'm looking at the stats and why this is such an important thing to have you back for a second time. I just went to Grok's AI, and I asked it, create me a chart of the number of Americans who die each year without insurance. And Jim, this is a great pool to be fishing in. Um, it's one in or two out of three Americans don't have insurance,
Yeah.
Yeah.
and the product's there. I'm a little surprised by this. Maybe not. I
Yeah.
think maybe
That's the
people.
way. Yeah. A lot of times, people think that it's just going to cost too much, right? I don't know how much the cost is. And yes, sometimes it can cost a little bit too much. If you're if you are maybe a little bit older and you need more life insurance, or at some point your life insurance is lapsed for whatever reason, and it's going to cost more than than you may think that it's going to cost. But if that's the case, it goes back to the need and the want kind of thing, right? So, if you feel like you need this certain amount, but it's going to cost, X, um, don't not get insurance or life insurance because of that. Let's get this amount that costs Y. So something is better than nothing when it comes to things like that.
For sure.
Man, you've been awesome to have on, and
Yeah.
we've been wanting to do this for a long time. Jim's a pretty dynamic member of our BNI Referrals of Integrity that we operate and do out of Spring Hill, Tennessee. We'd love to have you. I would love to have any of you watching as a visitor for my chapter. Just go ahead and contact me so I can go ahead and move towards a green light. Check out BNI if you don't know what that is. BNI changed my trajectory of my career in mortgage 20 some years ago. It's been great for all three of us, but Jim's an integral part of that. A lot of energy. It's interesting that maybe I'll sail us away with this. At the beginning, we asked Jim, "Hey, what's going on?" This may not have been on the air or not, but Jim said he took a vacation. He told us a little bit about seeing the Blue Angels. Before you came on, Jennifer, he told me, he said, "You know what, Lance? This is the first vacation in a long time where I came back and I'm ready to go. I'm energized," and I think that's great. Jim, Jennifer, and I, the last couple of weeks, I've been doing some open houses and other things, and we're seeing some energy and feeling some energy that we haven't felt from people in general, just
Right.
in a while. And
The long
I think,
slumber is done.
yeah, the
Yes.
deep freeze is
Yes.
thawing, and I think that there's going to be some good things. And if it's all right with Jennifer, well, and it's all right with Jim, if you can come back next week, that would be great. And
Yeah.
let's do part
Yeah.
2, and let's break this down into what is term about life insurance, but what term. And I'm going to come in and talk about and show some of the things that my customers are getting, which are not what Jim's offering. I'm getting what we think are scams, where people are like, "Well, here's this will pay off your balance of so and so, and it's only $12 a month." It's not realistic. So, and there's no
Mortgage
qualification. So,
calls.
yeah, we'll take a look at those things and talk about why you can meet with Jim Pratt at Shelter Insurance in Dixon. He's at 615-797-3986. He's the man. Jennifer, obviously one of the best realtors there is out there. And as much as I'd like to tell you that I have her telephone number memorized, I just say to my phone to call her. So her phone number's coming up here. It starts with a 615. What is it, Jennifer?
207-2652.
Mine's 615-498-2858.
I don't know anybody's phone number anymore. If I was stuck in the middle of the road and I wouldn't be able to, and I didn't have my phone with me, or I didn't
Well,
have the
yeah,
ability to spin a
we'd
button,
try.
I had to go to the old school payphone. I would never know who to call because I would just, I don't even.
You're calling your mom's number from high school?
Yeah, I'm calling 867-5309. There
Yeah.
you
go. All right. We'll go ahead and we'll bring it up with that. Another violation of copyright law, but we'll go ahead and end that right there. We'll see you guys next week.